Back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and joining my colleague Yatin, Mota. Well, Yatin, not a bad day. Nifty once again back above that 25,000 mark as the markets have been digesting the second week of this earnings-led reaction. We did start off in the green and then swiftly plunged into the red, but after 9:45, we maintained ourselves in the upward trajectory. From the levels front, however, if we see Sensex up about 400 points and Nifty above that 2550 mark as well. Midcaps, however, from the broader end of the markets, the clear outperformer. And amongst sectors, if you look at, Bank Nifty stood as the winner, led by the good numbers that came in from ICICI and HDFC Bank. So, Yatin, volatile swings, but a good day given that Nifty was able to break its two-day losing streak.
Absolutely, and if you look at the markets today, the banks clearly supported the overall market momentum. Reliance the numbers was down, but countering that downfall were HDFC Bank and ICICI Bank. So not only the markets got support, but the Nifty Bank also moved in tandem. Now, if you look at the Nifty Bank, that moved nearly 700 points intraday, and Nifty also gaining by nearly half a percentage point. Midcap also witnessing buying with the Nifty Midcap index moving by nearly 350 points. Advance decline ratio in the morning was slightly weaker, but end of the day it was almost 1:1. So, in general, the earnings reaction in the markets have clearly impacted the overall sentiments. We have a lot of results this week, but clearly over the weekend we had HDFC Bank, ICICI Bank clearly giving good numbers, and the reaction was also on the positive side.
All right. Given that some of the earnings reaction, let's take a look at some of the large cap gainers and movers. Eternal, in the last 15 minutes or so, we did see that the company reported its first quarterly performance, and that's why the stock is up about 5.6%. We did see that revenue was up about 70% on a year-on-year basis. However, EBITDA was down by 35% on a year-on-year, and margins saw a sharp contraction of about 260 basis points. On the other hand, we saw ICICI Bank, like we were mentioning about private lenders leading the Nifty into gains. ICICI Bank delivering an all-round performance. Brokerages also remain quite positive, and that's why we can see the stock reaction playing out with about 3% gains. So we'll discuss more of that later in the segment 2. And similarly for HDFC Bank, the Bank Nifty Heavyweight Index that delivered an inline set of first quarter results, so the stock did well as well. Other than that, we can see HDFC Life and M&M also coming in as the top Nifty gainers. However, on the contrary, if we see Reliance Industries with about 3% down, despite it saw good first quarter performance. On the other hand, if you look at Wipro with about 2.5% loss after a good last session that we saw for the IT major. On the other hand, if we look at the other loser, that includes the likes of Indusind Bank. The lender did deny reports of RBI expanding the CEO search. However, the stock did not do well once again in today's trade with about 1% loss. Other than that, we can see Eicher Motors, HCL Tech, some of the IT stocks also did not do well. HCL Tech, TCS, also some of the other top losers on the Nifty 50. But yes, broader end of the markets that exhibited a mixed trend. Mid-caps definitely an outperformer, while small caps were in the red. Yatin, what are you gathering from this pocket?
Yeah, so amongst the gainers also we had Eternal, which is Zomato, gaining 7% intraday trade post the numbers, and their losses have reduced substantially. Guidance looks good. In fact, they're talking about strong growth and being on target to add 2,000 stores when it comes to Blinkit, which is they are a grocery delivery business. And if you look at the food business also, Q1 was muted. Obviously, there is a seasonal trend, but the management expects that the margins should firm up in the coming quarters, and hence suppose that numbers shares surged 7% intraday, very close to that 275 rupees per share mark. Persistent ahead of numbers, 4% higher for that stock. Mastech also in the mid-cap IT space, moving 7% in trade. So the mid-cap IT stocks doing well. Siet witnessing profit taking after a downgrade by Nomura, 6% down for that stock. AU Bank weak numbers, stock down 5%, and Newgen Software, that stock also posed the numbers, another 5% badgering, and that stock clearly after the numbers is down nearly 10-15%.
Let's now quickly take a look at some of the stocks that did steal the limelight today. But of course, it's the big boy, that's your Reliance Industries, that limited the upside in Nifty 50. However, we did see from a Q1 perspective that revenue stood at about 2.44 lakh crore rupees, and EBITDA was also higher on a Y-on-Y basis. Margins at 17.6% and profits were at a quarterly record high. But it was aided by the other income and of course 8,900 crore rupees of Asian Paints stake sale that also aided the bottom line performance. Now, if you talk about segments, Reliance Retail, that continued with its double digits growth. Revenue per square foot increased by 16.5% on a Y-on-Y basis. Jio also reported an inline set of numbers, and this time revenue growth was led by 2% increase in subscribers growth and 1.2% increase in ARPU. On the other hand, if we look at the O2C numbers, that was also higher by Y-on-Y and a sequential basis too. And Mukesh Ambani, he reiterated that their long-term plans that they will be doubling in size every 2 to 5 years. So that's a positive thing that the brokerages took away too. If you look at how the brokerages have taken an initial reaction to this, Morgan Stanley says that new energy and telecom, these are the new bright spots, and they have an overweight rating on the counter and a target price of 16-17 rupees. On the other hand, Jeffries pointed out that the O2C business was impacted by the shutdown of refinery business, but they believe that the outlook remains quite constructive for the refinery business. And they believe that the focus now will be shifting on the AGM, where they will be talking about the possible listing of Jio, which is preceded by a tariff hike too. On the other hand, Motilal Oswal says that while the first quarter was a soft quarter, they remain positive on growth perspectives across all the segments, and they have maintained a buy and upgraded the target price for Reliance Industries too. Yatin, the stock was down today despite an overall decent performance. However, if you look at YTD data, stellar performance for the big boy.
Yes, and I think brokers haven't changed the ratings or the target price substantially lower. Obviously, O2C business and the oil and gas business seasonally, Q1 is weak, and hence we saw adverse impact on earnings. But Jio, in the telecom business, did very well, came out with flying colors. In fact, the Jio ARPU came in at 208 rupees plus versus the market expectation of 206, and this number last quarter was nearly 203.3. So the ARPUs have risen over 208, which is a positive. But what was also doing well in trade, offsetting the losses by Reliance, was ICICI Bank along with HDFC Bank. But let's talk about ICICI Bank. Strong quarter. In fact, CLSA has come out with the outperformer call. Target has been raised to 1700. Nomura's target on ICICI Bank is 1740. Now, CLSA says that it's a strong quarter on the net interest income growth front, and also the core pre-provisioning profits have improved substantially. In fact, they have seen a sequential improvement in the overall deposit growth, and also the loan growth, despite being at 11-12%, we have seen the asset quality remain stable on an overall basis. Nomura says that it has been a strong all-round performance by ICICI Bank. In fact, it trades at nearly 2.5 times 1 year forward price to book value, and they expect a 16% return on equity till financial year 28. Clearly, we had the fee-based income and the lower OPEX boosting the overall profitability for ICICI Bank. But yes, versus HDFC Bank, the quality of ICICI Bank numbers continue to remain quite strong over the past 4-5 quarters.
That's right. Coming to HDFC Bank, like Yatin was talking about, it's a good set of numbers seen this quarter, and the street cheered it as well. 2% gains coming in for the counter. We did see that the net interest income rose by about 5% on a year-on-year basis, but the pre-provision operating profit, that saw a spike of about 11% on a year-on-year basis. Other income, that segment that was there witnessed an impact of about 9,000 crore rupees due to the HDB Financial stake sale. But what the bank has done is that they have converted that 9,000 crore rupees into a floating provision. So that is the reason the reported provision numbers look quite elevated. But if you exclude, there is another 17,000 crore rupees contingent provision, and even if that we exclude it, the provision numbers are still in line with what the street was expecting. As a result, we saw that the profitability has increased by 12% on a year-on-year basis, 6% higher than what the street was estimating. And when it comes to NIMS, the fall is somewhere about 18 to 20 basis points. But from a core NIMS perspective, it was still better than what the street was expecting too. Also, the company has declared a special bonus in 1:1 ratio and dividend of 5 rupees per share, which is what made investors excited, and that's why we saw an upside in the stock too. And as a result, brokerages have also remained bullish on the counter, because we did see Nuvama increase the target price and Motilal Oswal also maintained the target price. Yatin, if you look at HDFC Bank also, once again, decent quarter performance after ICICI Bank, and the management has also mentioned that they do expect margin impact to reflect in second quarter, but they're quite confident of outpacing the system loan growth going ahead.
Yes, absolutely, and they have the requisite capital also to fund growth. Most importantly, Lovisha, this time the kind of gains we saw for HDB Financials, the IPO came in, and we had a gain of nearly 9,000 crores. That gain was used as a buffer. They have created floating provisions worth 9,000 crores, which essentially means that moving forward in the coming quarters, if there is any requirement or extraordinary impact on the asset quality, these kind of floating provisions can be used without impacting your profit and loss account. So, management being conservative, we have seen the entire gains of HDB Financial move to the floating provisions, which is 9,000 crore gain set off by 9,000 crore provision. So, nothing to worry about. It's a conservative and a very prudent manner of managing your balance sheet as well as P&L account, and which the market also appreciated. The management commentary was also strong, and probably in the second half, probably we could see the net interest margins also improve for several banks, including PSU banks, including the private sector banks. So, clearly strong set of numbers both from ICICI Bank and HDFC Bank, which clearly led the Nifty Bank moving by nearly 700 points in trade today.
That's right. Now that we have discussed about the heavyweight stocks so far, let's also touch upon the broader end of the markets. One stock which actually moved there, that was your Hatsun Agro. We did see that the stock surged up to 9%, but is settled with about 2% gains. Now, the biggest positive that came about in the company and the stock movement was an improvement in the gross margins that the company reported in their June quarter. 32.1%, that is the highest gross margins that the company has seen in the past couple of quarters. So, a multi-quarter high of gross margins that the company has witnessed. Now, what aided the performance was that a large part of their milk procurement is in-house. So, higher prices for the industry means better realizations for the company, as costs are also the same. Secondly, higher share of revenue from value-added products also aided the bottom line. And thirdly, since this is a season quarter for the summer products, so they sold more Arun branded ice creams, and that is what also aided the bottom line performance too. On the other hand, if we see net profit, that is lower, but led by depreciation, which has come in 137 crore rupees due to last couple of acquisitions like Milk Mantra. So, the scale up of Milk Mantra is something that we need to watch out for going ahead too. Yatin, the stock has been an underperformer from the past 1 year perspective, and today the impressive margins is where the investors have found comfort.
Yeah, Hatsun Agro, I think the stock has been volatile, and they deal in milk and milk products. Itself is a commodity business. It all depends on scale. When it comes to these businesses, Hatsun Agro numbers were not that great, but yes, the stock moved 9% intraday higher, only to settle above the 2% mark or so. So, this is one of those companies which clearly depends a lot on milk supply and the cost of raw materials.
That's right. All right. That's all the stocks for now. We did see Ultratech and Eternal report their first quarter numbers. We'll watch out for more of these earnings reaction in tomorrow's trading session also. And we'll be back with markets tomorrow. But until then, it's a wrap from Yatin and me. And thank you for watching.